Unlock the high returns of the expanding venture capital world right here on the Emerging Managers Podcast.
Well, everybody, welcome back to the Emerging Managers Podcast. I am Scott Kelly, founder and CEO of Black Dog Venture Partners and your host. And in today's podcast interview, we interview Aaron Zucker, founder and CEO of Sapir Venture Partners, where he discusses his journey from being a bridge between the U.S. and Israel in the innovation world to becoming a venture capitalist himself. He highlights the common pitfalls of founders, particularly in Israel, focusing too much on technology over product market fit and a go-to-market strategy. Sapir Venture Partners focus on early-stage, deep tech companies with Israeli founders, aiming to provide guidance, corporate structure, and customer engagement to help them build viable businesses. Zucker emphasized the importance of a strong team and a willingness to accept feedback, acting as a co-founder fund that helps companies get to the next funding round. He also discusses in his interview his firm's focus on non-consensus Israel sectors like energy, material science, and biotech, and their strategy for LB returns through early secondary market activities. So give a listen to my interview, and I'll be back with some takeaways. Hello, everybody. My name is Scott Kelly, the founder and CEO of Black Dog Venture Partners and your host for the Emerging Managers Podcast. And I'm really excited to introduce everybody here to Aaron Zucker of Sapir Venture Partners. Aaron, welcome to the podcast.
Thank you. Thank you, Scott. Thank you for having me.
My pleasure. And so before we get into what you're doing with the fund, tell me a little bit about your personal background, professional background before starting Sapir.
I've actually been essentially a bridge between two worlds, and that is the U.S. where I was born and Israel where I essentially grew up, and have always tried to take the best of both worlds. And I think we're seeing it today in geopolitics, but there's a lot in common in both of these countries. And the idea of innovation and entrepreneurship is very, very powerful. And I've played in that in different roles. I would say I started out in Israel like everybody else. Seems to be a lot of lawyers in Israel. I went to law school. I did practice for a couple of years, but it was mostly, again, around this world of innovation and startups and licensing IP out of universities and all of that world. But it was very frustrating, actually, to be of counsel. I had been entrepreneurial already in high school. I had small business things going on. And so I took the opportunity to go back to the US and get my MBA and really transition back into the startup world. But what was really important was to learn the difference in how companies are built, technology companies are built between Israel and the US. Mm-hmm. And I don't know if you know, but before you go to business school, there's a lot of this go and check out the schools and try them out, kind of like what you do before college, where you're going and see different campuses. And so I was doing that, and I had found myself at different top schools in the US, mostly the East Coast, and I had heard speakers, professors, and others that were totally unprompted telling stories around, here's an example of how not to build tech startups. Look at Israel. And I'm like, what? We're the startup nation. What do you mean that's not the way to build startup companies? But they were actually making a very clear point, and that was Israeli founders had this tendency, or still do, to build really cool technology and then come to market, and they don't understand why nobody wants to buy it. The gap between the market, the customer, the end user is so big, and they fall in love with the tech. And so I came to the US for my MBA thinking, oh, tech is the most important thing in a startup, then maybe the market, and then maybe the team, because, whatever, we'll hire who we need. And when I got to business school, that totally flipped for me. It went the opposite, meaning team is number one. If we have great people solving meaningful problems, then they're going to find a way to do it. And then you have a real problem, right? So that's the market. There has to be a real market. And then we can figure out the tech. So it could be, especially when we do very early stage, we'll talk about that later. But we do very early stage. And often the initial idea or even technology and intellectual property will be totally different by the time we actually get to market and are engaging the customers. And that's fine. And that's exactly kind of how it should be. So I realized I was doing things wrong. And so I spent a decade essentially as a founder, building companies, mostly deep tech, biotech. And that just taught me a lot along the way. But I've always been trying to help and give back. And so because I was bouncing around between the US and Israel, we moved the family back here, and I was going back and forth. I had time nights and weekends in the US or in the mornings here if I'm working US hours, so Israel's ahead. And I just do coffee chats with people. And I'd be like, how can I make introductions? How can I help? How can I give you advice? How can we talk strategy? Let's look at your deck. Things like that. And that actually led to me writing some angel checks. And then some people who had made money with us, and they were like, hey, you were the first time we made money in startups was with you. And if you're writing checks, maybe you know what you're doing, which I didn't. And they were like, we'll give you some of that, some more money to do that with. And we're talking small checks, right? This is angel size, 10 to 50K checks. Turned it into an angel fund, and it was going well. And in 2017, so right when we started to see that rise of the micro VC, we're out there and we're like, what's next? I had sold one company, left another company, trying to think about, do I want to go full time on investing? And I actually took 6 months and I built a pitch deck for myself on why we need another early stage venture fund. And that kind of morphed into the thesis that became Sapir ultimately, but it was based on that experience as an angel, as a founder, and how can we bridge?
I'm so glad that you started off with that, because the problem that you demonstrated in Israeli startups is the same for US startups. There are so many entrepreneurs that get addicted to the tech and don't know how to sell and don't understand the thesis of you have to have product market fit. You have to have a go-to-market strategy. So I'm excited that you came up with this thesis, because I talk to investors all the time like you do, and even investors fall in love with the tech.
Yeah, for
And
sure.
at the end of the day, you have to fall in love with the business, and you have to fall in love with the business that knows how to make money. And so I'm really thanks for that, reiterating, what I've been telling entrepreneurs for literally decades. So, well, thanks for that background. So talk a little bit about, Sapir, your thesis, where you're investing. Obviously, from I saw on your website, obviously a strong focus, Israeli founders, but talk a little bit more about the fund itself and, stage, where you invest, and anything else you want to share.
So we're actually a US fund.
Okay.
But we invest in Israeli founders. So
Okay.
those founders can be found obviously in Israel, but also can be found in the US. And
Okay.
we focus on that earliest stage. So think venture creation up to pre-seed. Pre-seed is
Okay.
late
Well,
for us, right?
wow.
And we do it in really deep tech. So think of that Israeli or a couple of Israelis who went to MIT, Harvard, Stanford, and now are trying to spin something out and say, we want to build a company. Because ultimately, the market will never be Israel. Israel's a tiny market. Historically, obviously, a lot of Israeli founders want to get to the US, but we've had other markets that are relevant, like Europe or going east.
Sure.
I'd say Europe is less relevant for Israeli founders today. The climate there is clearly not supportive,
Mhm.
but the US is even more so. And so we want to be that bridge, like I said, but we want to be there
Mhm.
really quickly. And we're working with scientific and engineering backgrounds, right, with these founders. They could be coming out of their masters, their PhDs, postdocs, MBAs even, but they're coming with a technical background and they need to bridge to that customer. And so when we work with them, we want to get in really early so that they're building to solve a real solution that somebody will ultimately pay for. Because
Mhm.
it's all about solving a meaningful problem, but getting somebody to pay because you're solving that meaningful problem. We focus on two things when we're there very early stage. And it's very similar to what you guys do at Black Dog, which is why I think we have a lot in common and we've been talking. The idea is to come in and bring, on the one hand, that governance, that corporate structure that is often kind of lost, right? Because these could be brilliant scientists and engineers, but when they're focused on the science, they fall in love with the science, but they also are not thinking about a board and board minutes, and they're not thinking about how do we build out a stock option plan. We'll see companies that come to us at pre-seed or even seed, and they'll be like, yeah, we have a bunch of options that are offered, and we'll be like, so show us the option plan, and they'll be like, oh, we don't have one. We haven't actually done it. We just have a bunch of contracts out there with us making commitments.
Right.
And these are all things that can later become major red flags when they want to raise the next round.
Yep.
So building that structure that comes and feels like a real startup. So when they go and raise the next round and we could take them to investors in our network, they look and feel like a company they can get behind. That this is a team that, knows what they're doing, has got their ducks in order, and we can be a part of it and just take them, to the next level. So that's one thing we focus on. The other thing we focus on is leveraging our network to engage with customers. Now, we
Mhm.
keep telling our founders, we don't care about revenue at that stage. It's not about the revenue. It's about you understanding how you can add value to your potential customer, or maybe figuring out who your customer should be, right? You
Mhm.
There'll be that assumption that I'm relevant for this market. It turns out you're not so relevant. Here's a better market. There's a lot of discovery happening through those conversations. And that allows us to build out a strategy, a go-to-market plan, a product development plan, a budget that fits with all that. And that's going to be what essentially they're going to go out and raise the next round with those things in hand. So that's what we do with Sapir. Again, our founders are mostly, they're all Israeli, but they're mostly US and Israel based. And that's what we've been doing.
So let's talk about the founders a little bit more, because you're obviously dealing with companies that have an idea only, don't have product, don't have traction, don't have customers. So when you are deciding to invest in these companies, it's got to be almost entirely based on the founders, I would assume. But what are the key attributes that make you say yes versus no on such early stage companies?
So I think you clearly get it, right? You work with the same types of founders, you understand these companies. What I tell my partners when I was recruiting them, and obviously LPs, we tell them we look for three things, right? So it's team, it's market, and it's the technology. We look at it as like a three-legged stool, right? So 3 legs is the minimum you need for a stool to actually stand.
Sure.
And what we say basically as investors, we're willing to take risk on one leg, right? So one of those could be wobbly and will be that leg, right? Look at us as a co-founder fund that's coming in to prop up that stool.
Right.
However, we won't take risk if it's the team leg. So team has to be solid. Then market or tech, we can help you figure out. But we're not trying to do both. That's too much. And we're not going to take risk on team. And if you translate that one level further to what that means practically, that we have to be able to add value. Now, adding value, usually when VCs say, all VCs say that, right? Go to every VC website, early stage, we all add value. Everybody says that. It's really, really overused, that term. So when we say add value, it really actually goes back to that idea of a founder, because doing that founder work, and we force our founders to do this, right? Noam Wasserman is a friend, Founders Dilemmas, right? His whole structure on the questions you need to be asking and building a founders in advance. And we very much believe in that. But we see ourselves as part of that process and part of that solution. And we know we're not the CEO. We know we're not the technical founder. We're that founder that's going to help them pull it all together. That third that can sometimes be, figuring out where to go and how to bridge between those two. And what we come and say is, when we say, can we add value, is can they actually hear us, right? Can they take our feedback? Can they work with us at that level? Because the one thing I don't want to do, and I think this is a privilege we have in our industry, is I'm not going to work with people where I feel like every day I'm banging my head against the wall, right? If I wanted to do that, I'd go to corporate America and I could get a job and I'd spend all day doing it. It's the ability to work with really, really innovative people, very entrepreneurial, but who are also open to our feedback and our guidance and support in order to grow. And they know that we're in their corner, right? So we used to call it mentorship-driven investing. So we took that out a little bit because we actually got feedback on that. But everybody also says mentorship. So what does mentorship mean? But that's really how we think about it, is how can we value to you like a mentor along the way? And we really want to be in the trenches with you for the first 12 to 24 months, get you to that next round. But then ultimately we'll start to scale back. And that's how we scale us, is right. We'll start to take a step back as the Series Seed and Series A investors come in and take you to the next level.
So it's interesting. I feel almost like I'm interviewing myself. I have used that three-legged stool analogy countless times. So, so fascinating. So obviously you've been doing this for a while. You've already had some good success. Maybe share some success stories with some of your previous portfolio companies and what's happening with some of the current portfolio companies.
So we've had great founders. I don't think we've made any bad investments as far as the people, which is the most important thing. But whether it's the tech, whether it's the market, whether it's other circumstances, we all know it's impossible to tell in advance. So we have had some great companies, still have great companies in the portfolio. I'd say from our early portfolio, from the angel days, one that really stood out for us is Tomorrow.io. So I don't know if you know, they're up in Boston. Were really the ones that as an angel helped me crystallize the thesis for Sapir, because these were 3 Israeli founders who are top notch. 2 of them are Israeli Air Force pilots. The other one is Israeli commando officer, and they were at Harvard and MIT, and they were really, the top of the top, the best you could think of as far as just on paper. And they were really good people. And I met one of them sitting on a panel, and we were just like talking, and we sat down afterwards and we got to know each other. He was like, "You got to meet the rest of the team." And I did. And then I'd start spending those nights and weekends, like I described earlier, just hanging out with them. And we'd be working like in a study room and on campus, and starting to figure out their go-to-market and their product development plan that needs to fit with the need in the market, and really it was all around this: how do we better predict the weather? And it's interesting because you think about their backgrounds as pilots, as a commando, they're like,
Sure.
you got to do a lot around weather, and it dated our life. And then they're trying to translate. It's kind of like dual use, right? They were thinking, how do we solve our problem from the military perspective and bring it to civilian commercial opportunity? And that's what they're doing. And it was fascinating. It was a great experience. I loved working with them, but I also saw how they needed our help. They needed our guidance early on. Now they're doing great. They're off races. They're out there. They're doing great. But in those early days, they had like basic questions on even how to draft a response email to a potential customer or potential competitor, like just the basics of bridging the culture. So Israelis have a cultural gap. I know they feel like they're at home in the US and they act like they own the place, but they do that everywhere. Don't worry. But at the end of the day, there is a big culture gap.
Sure.
And so how do you draft? How do you interact? So even coming from these top schools and extreme backgrounds, there was a value for us to add at that early stage. And that's what I'm trying to recreate with every investment I've made since. It was just a great experience. They're lifelong friends. They're doing great. That was like that real thesis crystallization, was when I realized we have a place to play in this ecosystem. And it was in Boston. Here in Israel, we've had some success in spinning companies out of the universities.
Okay.
Israel's universities have always struggled with how to commercialize their IP. And part of that is because the Weizmann Institute had such great success with a single drug, and everybody's tried to kind of replicate that. But none of these look the same. And I can tell you from personal experience, one of the startups we worked on, we were trying to spin out a technology from Weizmann to negotiate a license, because what we were taking essentially was software, and they kept trying to license a small molecule to us. Like, it doesn't work. And so there's a gap. And I could say that we've been a part of it, but there's been a big change over the past decade in how licensing is done in Israel. And so one company we have called Enzymet, that was spun out of the Weizmann Institute. This is a guy who had completed his PhD, and he created a single enzyme that was supposed to allow us to enjoy sugar without any of the consequences. And I sat with him and I said, look, it's great that you've got this enzyme or enzymatic process, but we're not going to invest in a single enzyme. Right. That's 0-1 outcome, too much risk, too high, of a cost into a single opportunity. And so we spent time talking, and I said to him, well, how did you develop that enzymatic process? And he's like, oh, well, we did all these. I said, what if you could do that over and over and over again? So this is a company called Enzymet, very innovative name. And they are developing enzymatic processes for lots of different things now. And so things from hyaluronic acid that could be used for medical grade and for injections and for all that stuff, but all the way up to how do we do biofuels, right? And all of these processes in between. And the idea is they're going to revolutionize biomanufacturing, which we have not realized the full promise of yet, and can totally change how we interact with the world around us, change our reliance on oil. So there's a lot that they're doing, and it's massive. We're very happy because their last round, their Series A, was actually led by Khosla Ventures, which is a huge stamp of approval for that. But that's exactly the bridge we're talking about. Talk about a scientist out of a lab in Israel that thinks he's going to change the world, focusing very early on getting engaged with the market, which they did, because they were looking, should we go into food? Should we go into fuel? Should we go into medical? Like, there were so many different ways to apply this technology that early engagement with customers that we helped facilitate and drove allowed them to figure out to build this, path as far as their strategy that attracted that type of support that will hopefully follow them through now all the way to success.
Fantastic. So what are you looking at now? What are some of the trends? Everything's AI, but in that, with that sentence, in context, what are you looking at now? What are the new venues, new opportunities, new industries you're looking at now?
I think funds like ours, early stage, small funds, we're not going to be playing with AI at the foundational level, right? That's not, for us, AI is a tool. And the companies we engage with is how are they using AI? And if you think back to, machine learning and before that big data and all this, right? We've been around enough that we've seen this cycle kind of, evolve. And I think that with AI, we're looking at it as a tool, but how people are actually using it, if they're actually using AI or not. Right. I remember we passed on a machine learning company that when we actually started to do the diligence and the CTO was like, yeah, well, our machine learning algorithms aren't really working. So we have 4 people based in Ukraine that are actually doing it for us. I'm like, okay, there's no tech there. So we obviously didn't make that investment. But that's kind of how we're thinking about AI now is who's really using AI and thinking about where AI is going versus who obviously not foundational, who's claiming AI, which is really more efficient automation. That's not AI. So we look at AI as a tool, but I think as far as industries, it applies to a lot of different industries. So obviously, specifically talking about Israelis, there's a lot happening around dual use in defense. We've had funds that were raised in the past couple of years that were totally dedicated to defense. We've looked at defense stuff. We like that stuff, but we actually look at it from the dual use side. And I think what's really interesting is also what you define as defense. So you were talking earlier about, firms, right? And how the emerging managers versus the established managers and where the funding is going. Israel has a similar problem in such that in 2023, it was over 70%. In 2024, it was already over 75% of VC funding, venture funding is going to cyber, SaaS, and fintech. We do not believe that that is the future of Israel's economy. There's still a lot to have there to be done there for sure, but we can't only be doing that, right? If you look at our universities, and if you look at our defense organizations, like Israel's version of DARPA, it's called Mafat. So patents that are being created, we're talking about dozens, if not over 100 patents a year being filed. They're not filing them on SaaS, cyber, or fintech because so that's no IP to file there. So what's happening with all of that innovation? We're focusing on those sectors. So if we talk about non-consensus, these are the non-consensus Israeli sectors. And this things around energy, these are things around material science, a lot of biotech. We very much believe in biotech, and that's our personal background. That's where we're focusing, and biotech is very broad. So biotech could be applied to food, to agriculture, to energy. So there's a lot, and obviously pharma and medicine. So there's a lot happening in those spaces here, and they don't have enough funding or support. And they naturally look, like we said, outside of Israel, because that's also where the market is. So can we work on those and get them there? It's actually a perfect fit for our thesis and where we see the innovation happening right now. In military, that means not cyber. So it's everything else, right? The military itself is doing stuff around material science, drones, robotics. There's a lot happening there to back.
I appreciate that. So let's change topics a little bit. Let's talk to potential LPs, investors, family offices, and the like. Let's see the call now. But first of all, maybe share about the background of, not in specific names, but who are your current LP BPs and what's the makeup of those?
So it's mostly high net worth or small family offices. That's obviously for our stage and for our size, that's a good fit. I would say we've learned a lot over the past couple of years or a few years since the craziness of ZERP and then, what's happened post-COVID. And what we realize is that we need to appeal on the one hand to investors like that who have no timelines, right? So an institutional investor is going to be sitting there with a stopwatch when I'm doing very early stage and deep tech. We know it's going to take a long time.
Right.
But even for investors like these types of LPs that are, less time sensitive, they still want to know that they're making money and that they're going to see some returns, not just us talking about TVPI all day.
Right.
And what we've actually are doing now is we believe the secondary market is going to stick around. It's not a blip that's in response to what's, crazy valuations and everything that happened in 2021. We actually think as companies are staying private longer, as these massive funds are being raised and claiming to be venture capital, which I don't think they are, that's a separate conversation, but those massive funds aren't really venture capital. At that point, they're already growth capital, whatever you want to define it.
Right.
As they continue to come in, there's going to be opportunities for secondary all along the way. And there has been, right? Investors come in, they'd be like, okay, let's buy out some of the founders' shares and we'll let the founders take money off the table at Series A, maybe early, B and C for sure. And so if we position ourselves as that co-founder fund who's in really,
Mhm.
really early, our goal right now is to use that type of strategy in
Mhm.
Series A is as early as A, right? So 2 rounds after us, but
Mhm.
definitely in C to create a 1x return to get people their money back early.
Okay.
Then we can
Smart.
all be aligned on taking the long road to
Right.
seeing success with this company and get the great returns we believe in. But it means I'm giving up a little bit of money in the long run in order
Mhm.
to make our LPs whole sooner. And we've gotten actually some very, very good support for that.
That's fantastic. So I like to close with two final questions, and the first one is, in the sea of venture capital funds that are out there, and obviously we can again have another conversation. What represents venture today? Why your fund, and why now?
I'll tell you a story. When I was getting into venture, I was like, well, it's fascinating, right? Because you get to work with all these different companies, these brilliant innovators, these passionate entrepreneurs, and I loved it. And it's the early stage, and we're building stuff, and we're in the trenches. And I had done it. I wanted to help the next generation do it. And I'm not an ideas guy, so how can I help you realize your idea? Great.
Mhm.
So I went and I'm like, how do you do venture? I asked the question. I asked a bunch of people, and I kept getting reference to that, that 2x2 grid of success in venture is non-consensus and right, right? So you have consensus, non-consensus, and right and wrong, or wrong and right. And so wrong and consensus, you're losing all money. If you're right and consensus, you'll make a little bit of money. But really, the success is that quadrant down here, which is right and non-consensus. And I'm like, "Oh, great. How do you do that?" They're like, "I don't know." Like, nobody can actually explain to you how to do that. It's not
Right.
like I mean, I was talking to a guy now who's got some amazing AI capabilities, and he's thinking about applying it to venture, and we're kinda doing a brainstorm on how he would do that, and I said to him, "You have answers for everything I talked to you about as far as the data and the analysis and understanding the market opportunity, but at the end of the day, there is an art here, and that is,
Mhm.
we talked earlier, the people." Right?
Yep.
He said, "No, my AI can evaluate people too." You're right. It could probably evaluate and tell me, here's red flags, here's things you need to worry about, here's things you need to work on, here's things that need to be solved in order for it to succeed. But you have to be in the room with the people doing that, and
Sure.
especially at our stage. And so what I would say is we're non-consensus when you think about Israeli, right? Because we're not cyber, SaaS, or fintech. So we're already in the non-consensus. We're also in that really, really early stage. And this is conversations I had with actually Peter Walker at Carta, because I've been trying
Mhm.
to sift through the data and to understand if in deep tech, there's an advantage of going even earlier. The data's kind of still out on that. We're still doing that
Mhm.
analysis. It looks good, but it isn't a huge difference from, let's say, getting in at seed versus pre-seed. Not necessarily justifiable for the risk. However, if we can take a bigger piece of the company because we're adding all this value, because we're coming in so early, because we're essentially helping them get founded and get set up, then it allows us to execute on that strategy that allows us to sell a little earlier, a portion of our holdings, and get those returns. And in today's market, I think that has to be part of every GP's story to an LP.
So, what are some final things you want to share to listeners today?
That's a great question. I actually wasn't prepared for that. But so I think what you're doing is great. I think we need more people at this early stage who are founder oriented, right? So
Great.
I once somebody said to me, you shouldn't say you're founder friendly. We're not their friend, right? We're there to help them. We're there to mentor them. Sometimes it's tough conversations. And it's really hard to explain what that is, but at the end of the day, that trolley is what mentorship is all about,
Mhm.
right? Able to have the tough conversations, being able to kind of be there and for them to see you as a friend and a supporter, but also be able to hear you when you give them that feedback. That's what this is all about. And I think those of us who have walked the path beforehand, on the one hand, the world is changing super quick, but on
Sure.
the other hand, some of these things are just truths that don't change. And you're working with people. How do you help them succeed? And their success is our success. And the minute you understand that, everything kind of starts to align and fall into place.
Awesome. Where can people listening in today learn more about Sapir and get in contact with you?
So we have the website. So that's Sapir VP. We're actually very proud about being venture partners. Kind of, you can get that from our story. We're Sapir Venture Partners, not Sapir Ventures and not Sapir Capital, Sapir Venture Partners. So sapirvp.com. We also have a great newsletter called Crystallized, where we write a lot about these challenges at the early stage and the trends we're seeing in the market. So people are welcome to join us there. That's on Substack. And I think that, LinkedIn, we're always on LinkedIn.
Fantastic. Aaron, thanks so much for being on the podcast. And for those listening in today, make sure you comment, listen, share this podcast, and make sure you follow us all at emergingmanagerspodcast.com. Aaron, thanks again for being on the show.
Scott, thank you very much for having me. This was a great conversation.
My pleasure. Thanks. Welcome back. As I mentioned, I wanted to give some key takeaways from our interview with Aaron from Sapir Venture Partners. And some of the key points for investors looking to invest with them is that they focus on the team. They prioritize strong, coachable teams. They're involved in deep tech and non-consensus sectors. They invest early stage, deep tech, particularly underfunded Israeli sectors like energy. They have an easy and an early liquidity strategy. The firm has to generate a 1x return for LPs at Series A through C, allowing for earlier capital returns for LPs. And they have a hands-on approach. As we mentioned in the beginning, they're a co-founder fund, providing significant guidance for these founders. And, for founders looking to a good investment partner, they're going to prioritize market and team over tech. He mentioned in the interview that founders love their technology, but they really get them to focus on the go-to-market and how to build a team that takes these great technical ideas and turn them into great companies and good success. They want to build on corporate structure early. They want to make sure they have proper governance, board minutes, stock option plans to avoid any red flags as the company continues to grow. And they want entrepreneurs that are open to feedback and guidance. They're working with them, not only with capital, but mentorship and support. And again, focusing on the strategy of Israeli-based founders in the U.S. and these non-consensus sectors, it's really providing a great opportunity for oversized returns, ease in liquidity, and great opportunities to get founder support. So this has been a hallmark of a lot of the earlier stage, lesser-known emerging managers that we've interviewed. And I encourage you to continue to tune in, follow, or share, and learn more about great investors like Aaron. Till again, see you soon.
Join Scott Kelly, Tracy Hazard, and their high-performing capital fund manager guests next week on the Emerging Managers Podcast. Don't miss our upcoming virtual and live VC Fast Pitch and podcast events. For more details, background on our guests, or an application to be our next guest, visit emergingmanagerspodcast.com. Don't miss out on shaping the future of venture capital and entrepreneurship with us by joining our robust community of innovators and investors today.